Hey all, welcome to the GMT. Today we'll discuss about important term about the management fee and how it get calculated with different funds. It may be the hedge fund, private equity, or maybe others. Uh, so first of all, what is management fee? So management fee is something which given to the general partner or the fund manager who is managing means his fund operations. On that basis, the management fee will be allocated. So mostly, the management fee will be allocated 2%, max 2%, but if fund is large in terms of a BlackRock or something, it will be down according to the things. So management fee is calculated on the many basis. Some exception scenarios will be there, it will get calculated. So first of all thing, management fee, uh, what parameter should be included? Okay, so revenue for the management, revenue for the manager, it impacts the return because it's directly impacting the NAV, and the revenue of a fund will decrease after the paying the management fee. It show the transparency also because who are operating the business like GP and fund managers, so it is a fund for them, so it maintain the transparency and cover the cost like salary, tax, legal and admin also. So who is managing the fund? It is management fees, salary for them. Okay, there are some types of a or we can say the methods of calculation of a management fee. The first method is AUM based. AUM based means asset under management. So whatever the asset currently the company, the fund is holding, on that basis the AUM get calculated. So management fee is equal to AUM multiplied by whatever the fee rate they decided. So where the fee rate came? So fee rate came where the agreement were signed between the fund managers GP with LP and the various stakeholder. So they decide about the uh, what fees structure should be there. It may be monthly, it may be quarterly, yearly, and the percentage also there. So we are talking now about the annually. Okay, you can calculate monthly also, divide by multiply by 30, divide by 365 days, and if you want to daily, you can calculate daily basis also. Okay, but most important thing, it calculated monthly, quarterly and yearly only, not daily in most scenario. So how this is how the thing will work. But once we assume that it is work like this only, but just want to talk about, imagine a fund manager making a crores. Okay, because this AUM, if 2%, if fund running with 10,000 crore portfolio, okay, and 2% of a 10,000 will be around 100 crore, not 100, 200 crore, correct? So 200 crore goes to the GP as a part of a managing the operation. So in this part what you learn is 2000 crore directly going to the 200 crore directly going to GP as a salary for the year. So imagine the fund manager making a crores, not from the investment but the fees they charge you. Okay, let's just want to break down into some things. So that's why we discuss about how they are making a crores in the through management fee. Okay, so first is the AUM base. So whatever the AUM is running 2%, like for example I give the example of 10,000 crore. Okay, the 2% is coming 200 crore. 200 crore is coming by multiply by 2, divide by 100, and annually they are getting something. Okay, so you can monthly you can divide by the 12. If you calculate annually, divide by the 12, or if you want to daily, so you can divide by the 365 day. Then you can let you know that what is the AUM for that same. So method 2 is the tiered AUM base fee. Okay, so in which what will happen, like a new fund started and few investor like added 50 crore and next investor came at 50 crore. So and above investor will be 100 crore. So let's assume here the thing example is there. So it is assume that it is open end fund, and every quarter, every half yearly they are adding new investor with 50 crore for example. Okay, so what happened, they decide in their lpa that if new investor get added and more fund will be come into, so according to fees will get reduced. Okay, they decided into lpa, and that basis their will. So they decided up to 50 crore aum 2% will be fee. Now if the two between 50 crore to 100 crore, if our aum is going, so we can charge 1.5. If above 100 crore aum will go, we charge 1%. So like this they already decided into their lpa, and that method they will work. Okay, the third method is a fixed flat fee. Okay, in which what happen, certain amendment had been used in lpa, and they decided is used for mainly for the small fund size, where the fund size is small, and for the long run it will run on the long only. So for the sma, or maybe for boutique investment and investment manager, or maybe for the family offices as well. So in this condition they fix the management fee, and same will be occur through the annually or quarterly they will charge. Like that, fourth method is performance based fee. Okay, so you already know that we have a general manager, general manager, or what they will do, or they have a ratios. Okay, 2 and 20 ratio. So mostly it is asked into interview, 2% is the management fee, 20 is their profit sharing. So whatever the general partner are there, okay, so general partner, they what they do, 2% is their management fee, and 20% is their profit after when they do the distribution. In same cases, what will happen, the structure of a 2% of aum is fixed, 20% profit fixed on the performance of a fund. So here the hurdle rate and high water mark will be there, according to it will get generated. So for example, I give the example also. So fund grow from the 100 crore to 120 crore, and the profit is 20 crore from the fund. Perform 20% is performance fee is a 4 crore, and 2% is a management fee for 2.4%. The total fee general partner will have 6.1. Just want to elaborate how the fees get calculated. Okay, for example, your aum is reached to the 100 crore to 120 crore. So if you calculate 2% of a 120 crore, so it will come around 2.4 crore. So 2.4 is given to first general partner. The other 4 crore is a benchmark for the 8% hurdle rate. So now for example, I will take an example here. So if you calculate 20% of a performance fee, like profit is 20%. So around if you calculate 4 per around 20% of performance fee, so to 20 crore, 20% will be 4 crore. So 4 crore goes to uh, gp, okay, general partner, and remaining whatever the 60, around 40, around 13.6 goes to lp. So this is how it will get calculated. So fifth method is NAV enabled fee mutual fund. For it is used for the mostly for the mutual fund. So how is calculated is known as a total expense ratio also. So how it is work? Fees are built into the NAV, deducted daily. So for example, it is a automation type of, we can say automation type, in which what will happen, directly auto deducted through the fund every day. So this they have set a limit, like every day you can reduce this much fees as a part of a management fee, and auto deducted. So what they will do, annually they have 1.25. If 1.25 divided by 365 or 363 is there, so daily this much percentage will come. So daily whatever the AUM for that day, last day, same it will get calculated, and it will deducted from the fund. So this is a summary how it is fund work, like percentage of aum slab, most fund, and the simple. Just want to elaborate, tire aum we get discussed, slab will be there, like 50 crore till 50 crore 2%, 50 to 100 it will be 1.2, and above that is 1%. So mostly used in the PE fund, and fair to investor as well, because they know that AM is increasing, so fund manager will gain more. If we keep 2%, it will be more difficult to pay the LP, and HGP will get more through the management fee also. Slightly complex calculation if there are many classes between that. Okay, so AM percentage is means percentage wise, like 2% is written into the 2% return to their LPA. So accordingly, the most fund will use the same fund, simple and scalable. Monthly and quarterly billing will be happen on this one. Fixed means already fixed for the small fund they will use. Performance based means the hurdle rate and taking consideration of a high watermark it will done. And now available means it is a transparent where auto deducted has been happen. So through this it will take. So final takeaway for this, we can say always know how the fees are structured before investing. Okay, so for example, they have to do the we can say budgeting. On this basis they have to maintain which type of fees should be suitable for the fund, and accordingly it will implement it. Same way it is vary by the fund type. Maybe if fund type is different, mutual fund, private equity, or maybe other type of fund, or their investment goal is different, their objective is different, it may be vary on the management fee. Impact to return: fees directly impact on the net investment return. I say that because if fund is earning 20% and 2% is going management fee, so there are a lot of big change to the investor. Okay, so investor will get less if management fee get deducted high. Okay, key terms you have to use like high watermark, hurdle rate, and TR. You can use that term. So this is how my slide has been done, but I have prepared the one Excel sheet here. It will give you the rough idea how things will work. So okay, so here the percentage of AUM, for example, percentage of AUM like 24 million. So if 2 million per annum per month, sorry, 2 million per month, it is a percentage based AUM. Tire based AUM means it is a fixed part. Fixed flat means, like for example, for a small business it will use 2%. My year quarterly means 2.5 million will be deducted. 64 million is a performance base, means 24 goes to management fee, that as a management fee, and 40,000 will be the performance fee will be there. If 15 million is annual fee, then 41,000 per day will be deducted directly through the things. Okay, so how the formula is this? The formula is simple. AM multiplied by whatever the percentage of a like here 2% we take, 2% is there, so 2% is the formula for AM. Slab base means for example if your 50 till 50 million it will be 2%. 50 to 100 it may be 1.5, and above 100 it may goes to the 1%. Flat and fixed use for the small businesses. Then performance based using the high watermark and logic, this will use. And the tire will be divided by 365, it is used in the mostly in the mutual fund. So anyhow this is a model, but you can build the Excel model also to pre build. You can build the spreadsheet also for the year, that how it is get impact into your AM, and you can decide accordingly. You can build the formula sheet, real scenarios like something, an interview script also on the basis of this. Okay, so anyhow the simple one example I have a draft here. A fund has 100 crore AUM. Performance this fund year is 18%, means 18% they have achieved. The fund charge 2% management fee, 20% performance fee, and 10% hurdle. What is the total fee? Okay, so he's asking about total fees. So first of all we calculate the profit, means 100 multiplied by 18% means 18 crore they get a profit. Hurdle rate is 10%, they already mentioned, means profit above hurdle rate means 8%, it's something is there. So if you calculate 100, so it may be 8 crore. 8 crore is their hurdle rate. Okay, after yeah, above 8 crore is a profit. Profit should be distributed into percentage based to the general partner. So performance fee, how they calculate? 8 crore is a profit. Okay, multiply by 20%, 1.6 is their profit distribution to GP, and the management fee is 2%. Already we decided. So 3.16 will goes to the GP. So in this way the calculation will be happen, including the management performance, high watermark and hurdle rate. So this is simple example. You can draft your example in some different way also. It will help you to understand this, how the performance, how the management fee get calculated. So hope you like this content. We'll continue some other topic on this same related topic. So stay tuned with us. Thank you so much for watching. We'll meet you on the next video.